And a warm welcome to one and all. What we're going to do today is we're going to check my Vanguard. It's been a couple of weeks since I've done this, simply because I've been on holiday. And part of the Scruffy Life channel is it's my investments, which we're about to see now. My travel. So I do get out and about too much. You'll have seen one where I've just literally come back from Corfu. Next trip, probably be a lodge in September sometime. Then we're off to Benidorm in October, and then we're off to Las Vegas in November. So it's a pretty packed time of things for me. And, of course, my health kick, which I've started this week. Because as I quite well know, as a fat bastard, look at that, grip big. And in fact, part of my health regime is not necessarily lose weight. I just want to get my fitness level up. So I'm taking walks each day. I'm doing press-ups each day. I do them on the stairs because I was a little bit too heavy. I'm like 22 and a bit stone. So I find it a bit difficult and my back's smashed and all of this sort of thing. So the goal is to actually get round 9 holes of golf. But I've got to get my fitness levels there in the first place. So that's what that is. But today, it is Vanguard and investments. And I'm going to draw attention to the smaller pot, and I'll explain why when we get there. So, I track it all on a spreadsheet. Now, for those of you who follow me on the other channel, the Scruffy Trader, and anybody who's known me in business, knows I run everything on a spreadsheet. And reason being, well, it's very simple. I just like to plan things. So, if I move that over, you can see where this fund started. It actually started in January 22 with very little. And I've just been adding into it over the years as much as I can. And we've now got a fund value of 239,286 as it stands today, which from the last data sample that I gave you on the 25th of July, it has moved up 3.6. So what we'll be looking to do is, the way I track these things is, I'll put in today's date. I'll put in the profit change as it is today. So it's actually quite substantial. 8361.33 from the last data sample that we did. And it was up 3.6. Okay. And I'll be starting this balance at what it is now. So it's 239,286.64. And then when I do the next change, it'll tell me whether it's up, down, or indifferent based on the last time frame. Okay, so now that's in play, and we can see. Now, I haven't got as much into it this month as I would like. I've only been able to put in 1780 up to now. But it's early days. It's only 7 days into the month. And if I get some extra surplus money, I'll drop that in. And that's the idea behind it. Now, it's all well and good looking at it on a spreadsheet because I can put whatever I want on there. Here's the real figures. So there it is there. Okay. And this is the investments as it is. Okay. So we can see it's broken up into a pension. It's broken up into ISA, a quick fund. So it's just like a standard. But this is the account that I'm most interested in. You see, I started that with relatively small money, which if we drop this back, we should be able to see. There it is there. Okay. So it started solely with 360. And then we've put in a little bit of money each month. Now, I'm not adding anything into that other than 25 quid a month. And the reason I did that is so I can show you how an account will grow just on its own with just drip feeding a set amount into it. And it is bounced up tremendously. The interest that's generated off pennies is outperformed any bank. There is not a bank in the land will pay you that in such a short period of time on small money. It just doesn't happen. Okay. Now, the investment side of it is here. So the cash, I don't really keep much in cash at all. I keep trying to put it into the fund best I can. And then I work on some all caps. Now, the all global all caps of sorts, apart from the VN3, NB rather, which is just North American. Okay. Now, the idea behind the two globals, because I've just added in the North America, just simply because they're doing quite well and everybody else is falling off the cliff, is the FTSE Global All Cap. It's relatively cheap to operate. And it's almost like buying the haystack, not the needle. With it being global, it takes in everything. It's got something like 7,000 instruments inside it. So if one's falling off the cliff, another one will get picked up. Now, the V3AB looks at ethical values and emerging markets. So it's more weighted that way. So it's not as aggressive as the FTSE. But again, it balances the portfolio out a little bit. And as you can see, they're doing quite well based in relative terms to the account balances. Now, from here, if we come on to performance over the last year, what we'll see is a rolling year ago, this was just shy of 130,000. Now, it's 239. So you've got the thick end of 110,000 quid increase in 1 year. 1 year. And I've got about 4 years left to run on this portfolio before I start winding it down. I'm 56 years old and I'm going to start winding it down when I'm 60 into safer assets and then let it run off into the future for however long. The idea of this particular fund is really just to give me a little bit of a treat when I retire, and also set my grandkids up. That's what it's for. Okay. Now, the investments this year on their own, without me adding anything to it, has grown 35,452. So it's actually generating a wage on itself now. I don't really have to add into it that much. All I have to do is just reinvest the dividends and the profits and let it do it itself. Now, it's not always a bed of roses. In fact, sometimes it can fall well on its arse. And you've got to be prepared to take those peaks and troughs. Now, at the moment, my return is 22%. Outstanding. I'll live with that all day. But let's have a look at the month on month. Well, this month it's doing okay. You know, it's pulled in the last 7 days, nearly 6 grand's worth of profit. I will go with that, but bearing in mind, or I should say it's returned 6 grand, but I've put 1781 into it myself. Last month, it pretty much wiped out everything that I put into it, you know. In fact, it was terrible. So it's not about the wins all the time. Sometimes you've got to take those losers on the chin, hold your nerve, DCA into it, dollar cost average. Just keep on going and it'll work itself out. Now, as you can see, when we come down here in March, there was a hell of a thump. It was a huge thump. And it was like, ooh. But it rebounded the very next month. And then some. It had a bad time in December. Had a bad time in November. Now, this happens over and over. So if I go back in time and we go sort of, where are we at? 1st of August 24. And then drop this in. What we'll see there, so like a couple of years ago, it was 87,943. I managed to get a little bit money in. Collectively, it's been quite a bit. But what that's highlighting is the snowball effect. The main money is coming in now. It was relatively small 2 years ago. But I still had to take on the bad times. Like here, that's the thick end of 10 grand in just a short period. Now, that's when Trump was doing his tariffs and one thing and another. And I was prepared to still DCA into it. And it got it back in sort of 3 months and then some. Okay. Likewise here, took a thump, but it came back. So the moral of the story is don't be frightened of losses. Lean into them because you'll actually get a better price. And then when the market recovers, it'll pay dividends. Now, when it comes to transactions, again, you're drip feeding into these things over and over all the time. Here we go. So 766, 151, 658, drop 500 in, 153. They're not big amounts all the time. You know, what I'm doing is I'm just constantly feeding over into this as best I can. And the reason that I do a drip feed approach is because then I don't miss the money. So for argument's sake, if you've got, I don't know, say a spare £5 in your bank account at the end of the week, why not put it in a savings account? Or sweep the change into a savings account. I do this all the time. I have it set up on my bank account where if there's an odd 50 pence or whatever over the top, it takes it down to the nearest round number and puts it in a bank account. Now, I add in everything sort of, I basically take it to the nearest 5. So if I've got 18 quid on the end of an account, I'll take it down to 15 and drop the 3 quid in another pot. Now, over a period of the month, that all adds up. And every time I see it above a £5 or above 10 quid, I drop it into here because I can buy a V3 account because the position size is relatively small. I can buy that unit. You know, if I want to buy the global unit, I've got to put a couple £100 in. But that's how it works. So sort of V3 AB, not a problem at all. The V3 North American, again, it's dirt cheap. The 5 or 6 quid a unit. So if I've got tenner in that little account, I'll drop the tenner in, buy a unit, let the cash build up inside the Vanguard, buy another unit with the cash. And what it does is it constantly feeds it. Now, because I haven't seen it disappear out my bank account, I never give it a second thought. And then after a few months, suddenly you go, shit, oh, quite a bit of money here. And it's just by watching what you're doing. Now, another thing is you might sacrifice something. You might go, well, I normally buy 8 coffees a week. You know, because one day you might have a treat and have 2 coffees. You know, why not trim that back and just have 1 a day? And if you got 1 a day, well, I don't know how much a Starbucks coffee costs these days, but it'll certainly be 4 or 5 quid. Well, that's 4 or 5 quid a week. If you cut back on, I don't know, say you smoke and you smoke 2 packs of cigarettes a week. I've got no idea how much smoking costs because I don't smoke. But why not try and cut half a pack down so it lasts that little bit longer, and the money you save across the month, put in a bank account. Little things like this. Or you could even try and save your petrol. You know, if you're going to walk to the shops and it's not that far, instead of jumping in the car and driving for 2 minutes, get off your arse and walk for 20 minutes. Get what you're getting and then walk back. And your fuel bill will go down. The money you normally save for your fuel, put in a bank account. Simple things like this all the time add up. And I know it's easy to say it, and it is, but I genuinely practice it. I genuinely do. I use cashback websites, you know, like Quidco and things like that, where everything I buy, I get money back. That goes in there. So when I'm traveling, I normally get easily anywhere from 80 to 150 quid back off the purchases for every holiday I go on. Well, I go on holiday 4 or 5 times a year. You know, last year we did it every month because it was part of our anniversary. But if I'm doing that, I can get easily 400-500 quid back a year in cashback payments. You know, use your credit card and various other things. Loads of things do cashback. All goes in there. So that bumps it up by 500 quid. Then that 500 quid works for itself. And this is it. And now those who know me well know I trade for a living. I'm a market analyst as a job. You know, so I analyse the London Stock Exchange and the New York Stock Exchange mainly. And I take out of the markets enough to pay me. And whatever the surplus is, if I haven't bought a holiday with it, which I often do, it goes in there. And that's why you see a colossal amount of money in, because I live in the real world. I know you've got to save and plan to save, whereas most people just think, give me. Doesn't quite work like that. Got to put a bit of effort in, guys. A little bit of effort, you know, and that's it. So my portfolio is doing very well. I targeted 200,000 for the coming year, and we're at 239 already. So I'm well ahead of the game. But the reason why it's conservative on its target is quite simple. Last year, I actually achieved target. And in the last 2 months of the year, it dropped back that much. It actually put me under the target I set myself. And I was like, it's a bit keen, that. So what I've done is I set a target this year of £30,000 increase. Well, it smashed that. But it has to maintain it. That's the kicker. And that's why I was talking about losses. I am fully prepared to take a loss, but I've targeted it in such a way that if I'm still sort of the north of 200,000, even by a quid, I'll be happy because it's all part of the long-term plan. So if you're stuck, you know exactly where I am. I do these updates every single week on a Friday, just so you can see how an investment can swing from one side to the other. Because one of the things that I will talk about is when it's going bad, how to control yourself. And that is a big thing, because normally people, when they see it going down, will naturally sell it. And they're actually selling at the worst time possible. You need to be leaning into it and actually buying more when it's selling. But there are certain criteria that you have to look at, because if you're in a market crash, well, how long have you got left of that portfolio? Well, I've got 4 years, so I'll leave it be. I'll just let it keep on going. If I was 6 months in, I'd have to make some choices as to what I'm going to do with it. And sometimes just cutting your losses is the best thing, if you need the money there and then. If not, let it play back out and you'll be fine. Okay, guys, live your best life, and I'll see you all in the next one.